A quick guide to reverse mortgages in Miami, Florida. The reverse mortgage Miami, Florida residents love. Economic experts report that as housing costs have actually increased over the previous years, the amount of money that families are saving through 401k strategies and FDIC insured savings accounts has fallen. For many people approaching retirement age, that implies they might be equity rich and cash poor at the very same time. It is not uncommon today to find people living in $1 million homes almost entirely reliant on Social Security to get by. A 1994 advisory council on Social Security issues and patterns concluded that reverse mortgages might offer an extra source of income for seniors, although at the time real estate rates were not high enough to make this a meaningful source. Well, things have altered. What is a reverse mortgage? A reverse mortgage is still a loan with your home as the security. However, it is entirely different from the sort of home loan you got when you purchased your home. These are the significant differences. Reverse mortgage Miami lenders pay you. That's correct. You do not make a month-to-month payment with a reverse home loan. The loan provider pays you, and the loan can be set up so that you can receive money in a lump sum, you can earn money in a regular month-to-month payment situation, or you can earn money at the time when you want it and in the amounts you demand. How much cash is available from your home? The primary determining aspects are your age, the value of your property, and the prevailing rate of interest at the time. You continue to live in your house with your reverse mortgage in Miami, Florida. When you get down to it, remaining in your house is actually the entire function of the reverse home loans. The twist is that rather of paying someone else to live there, you make money while you continue to live there. By the rules of the reverse mortgage, Miami, Florida homeowners can continue to live in their house as their primary residence. You can spend any amount of time visiting your grandchildren and children. You can travel at your whim, and you can continue to spend your summers at the lake so long as your house stays your principal home. Reverse mortgages in Miami, Florida allow you to retain ownership of your house. A reverse home loan is not a sale. You keep all the rights of ownership that you had prior to the reverse home loan. You do not need the loan provider's consent to paint your home a different color or to remodel. You can put your home on the marketplace and sell it for the highest price. You can also will it to your kids. If there is a modification in ownership, such as by sale or through the death of the last surviving owner, the reverse mortgage will need to be paid off at that time. The lender would be entitled to get from the profits of the sale only the quantity you originally got from the loan provider plus all accumulated and unsettled interest to date. Any quantity remaining after paying off the reverse home loan lender would go to you, your spouse, or to your estate. The unpaid interest on the loan increases with time with your Miami, Florida reverse mortgage. Another method of stating this is that you control the amount that must be paid back by controlling the quantity of cash you originally borrowed from the lender. A reverse home mortgage is still a loan, and the cash plus interest has to be repaid at some time, typically from the sale of your home after you and your partner no longer live there. Due to the fact that the primary amount of a reverse mortgage cannot be determined until after you have vacated the home, neither can the maturity date of the loan. This can be a difficult concept to wrap your head around since it is so different from traditional home loans. By laws pertaining to reverse mortgages, Miami, Florida borrowers can never owe more than the value of their house. This holds true for the reverse home loans sponsored by the federal government, HECM, or Home Equity Conversion Mortgage, although it may not hold true for independently created reverse mortgage programs. The benefit of the federal program is that you, your surviving spouse, or your estate can never owe more than the loan balance or the value of your house. Your reverse home loan lender cannot get any payment from you, your surviving spouse, or your heirs, or from any asset other than your home. Reverse mortgages Miami, Florida residents can really benefit from. You do not make a regular monthly payment with a reverse home loan. A reverse home mortgage is not a sale. You keep all the rights of ownership that you had before the reverse mortgage loan. If there is a change in ownership, such as by sale or through the death of a last surviving owner, the reverse mortgage will have to be paid off at that time. Any quantity remaining after paying off the reverse mortgage provider would go to you, to your surviving partner, or to your estate.